Morning, Steve Free in Chicago with the morning grain comments. Well, over the weekend, there was a truce between the United States and China that no additional tariffs would be imposed or added as far as China goods to the United States. Good news, bad news. I think that overnight the prices were higher in anticipation that China may come in and buy some U.S. ag products. The bad news is the market's a little disappointed in that we're not higher overnight. Right now we've got beans up 16 to 17 cents and corn and wheat up about 4 cents. So we're just under levels which some people thought we might trade last night because of the news. So right now commercials feel that China could come in and buy up to 5 million tons of U.S. old crop, new crop soybeans and maybe some hogs. No news on anything else. So the key will be the market's going to be watching for any daily sales announcements. The perception is that the tariffs are still in place on U.S., so the Chinese government are going to have to buy the beans and subsidize the 25% tariff. Big picture-wise, South America has still got a good crop coming in 2019, and the main thing is that if at the end of the 90-day time frame there's no deal, the president will impose additional tariffs and add the tariffs on China goods. So we'll be back not only at square one, but worse off than we were before. So the market's pretty cautious as far as the grains are concerned. The one winner in all this could be the Chinese economy. Chinese stock market's up sharply. Our stock market's going to open up sharply, thinking that this shot in the arm, or at least truce, will help the global economy. We're also seeing crude up by $2 a barrel. China's the #1 buyer of energy in the world, so maybe this will help that. And the Russians and the Saudis agreed to current extension of the cost production cuts in as far as crude oil is concerned. So that might help crude oil. The dollar is a little bit lower, as you would expect on this type of news. So most commodities are higher, just awaiting to see what happens over the next 90 days. Wednesday, the stock markets are going to be closed because of the observance of the funeral of former President George W.H. Bush. So we'll see if the CBOT follows suit on that also. As far as the funds are concerned, they were buyers of beans, meal, oil, corn, and wheat on Friday. Estimated to be short about 55,000 beans, now long about 14,000 corn, short 31,000 wheat. Many of the farm advisors suggested that farmers should add to cash sales on this news. We're thinking about maybe adding 10% for bean sales, both old crop and new crop, and even start selling some 2020 soybean sales if the November future's up there at 977. Some people are adding as much as 20% in old crop corn sales and 20% of the 19 corn crop sales, and adding to 20% old crop wheat sales and 20% of the 19 wheat sales. Again, especially corn and wheat, prices are a little bit below where we thought we might be able to make some sales. But take advantage of this rally and sell a little cash, because two things. Number one, in 90 days, if there's not a deal, prices go back lower. And number two, in 2019, if global crops are normal, then we should see carryouts go up and prices eventually go lower. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.